All right, good morning, everybody. Can everybody hear me okay? It's already buffering. Holy cow. All right, good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. It looks like we're already having some buffering issues, which is insane to me because I tested this. I did a whole testing series yesterday to make sure that this wasn't going to happen. You want to guess what happened? We didn't have any buffering issues during the test. And then now that we're here doing it live, it seems like we've got some buffering issues. You know what? I am just going to do my very best. We are going to make the very best. We're going to get this thing going. Let's see here. There we go. Ladies and gentlemen, good morning. It's a shame to have this thing buffering. I'm going to get this fixed. I'm not the 100% best with the whole technology thing, and apparently even doing my due diligence, it still has seemed to have failed. So it's okay. We're just going to make the best of it. All right, just a reminder, this is not financial advice. The information on this channel is provided for educational and informational purposes only, without any expression or warranty of any kind, including warranties of accuracy, completeness, fitness, for any particular purpose. The information contained in or provided. Yep, read through this. That way you know this is not financial advice. I'm not a financial advisor. This is all for education purposes. All right, great. So let's get rid of this, and I'm just going to get right into the analysis part, but I wanted to walk through a little bit with, what are we looking for? Again, going back to these talking points and looking at, hey, I can look at the big picture. You can look and see, let's see. Looks like you all are really far behind. All right, we're just going to keep going. Weeks of breakouts. Give a big picture. So we're looking at what is the direction of the market? Where are we going? Is it week one breakouts in one direction? So if we've gone and done something like this, this could be week one breakouts and then pulling back, and then looking for some kind of 3-day template where that would be acceptable. So like a breakout, maybe you get an inside day, maybe you get a first green day and then breakout day one, and then on the next day you can look for a template or something along those lines. So that's what the weeks of breakouts is going to do for us. Man, I'm really struggling this morning. Technology is not helping. It is not in my favor. It is not making this easy for me. It's all right. We're gonna persevere. We're gonna get through this. All right, days of breakouts. So I'm looking at, signal days, 3 days of breakouts, 3-day cycle, signal days like the first red and first green day. Looking at weekly templates, Monday, Tuesday, Wednesday, Thursday, Friday, and things of that nature. All right, I've got all these different things to describe those here. And I'm looking for a certain type of price action once we get to a level. Previous days high, previous days low, looking at how they get to those areas, ramping. Stacey talks about ramp volume and an order flow for the move back down, so it can be a lot faster. 3 push patterns, like 3 peaks, could be triple tops. The little stair-stepping motion at the highs and the lows, things like that. Peak formations, M's and W's, the half Batmans and things like that. And then once I'm looking to get in, once I get in, am I getting in on the peak formation or am I getting in on the first pullback? Something like this, the coil above or below the peak formation to go vertical, that can be very useful and beneficial as well. And I actually had found this other slideshow that I had made a while back, and I don't think I ever used it, but this is actually, looking at the price action at the extremes, what I'd like to see. So looking at, 3 push patterns and stair stepping, studying the patterns at the extreme. So this was at the high of the day. The high of the day was put in at the previous session. And then studying the peak formations and the way that they engulf them, and how they come out of consolidations. 1, 2, ending in 1, 2, 3 for that third push to the high, and then the engulfment, of course, volume trapped above, push 2, things like that. So in this, I've labeled off and put in like, hey, we're looking for ramps and stair steps, peak formations, all of those different things. And then we can go through and just look at these real quick because there's not that many examples. What is the ramp? This is that dragging sort of price action that is just pulling in one direction and not affording people the opportunity to make any profits on the short side, just forcing people to buy up high, forcing them to buy higher and higher. Look at this beautiful ascending triangle that breaks out and immediately puts in a peak formation and pulls back down. This is where the pump began, and then of course it collapsed on the way back down. But these ramps are supposed to be a place where the market can fall through very quickly and very aggressively. So here's some more. We've got this pulling in one direction sort of price action, and then a 3 peaks pattern at the high of the day, or the high in general, that breaks down. So here we go again, coming out of consolidation. Then you get the ramp and that 3 push pattern at the high, the lower low, the pump up, and then the collapse to go back down. I'm just going through these examples really quickly, but it's the same exact thing over and over again, and that's why it's so repeatable, is because the setups themselves, the signals are repeatable, and then the price action that we're looking for, that I'm personally looking for, is also very repeatable. All right, so you get the 3 peaks pattern again coming out. We're at the high of the day, push 1, push 2, and 3, peak formation. All right, and then this was an example of some chop, some nonsense, some garbage that you really just don't want to be a part of. And once you notice that you're in this consolidation, maybe it's best to just abort and not, take part in it. All right, here we go again, same pattern. And then down at the lows, all those were kind of shorting examples. This is more of a throughout the day. You get the stair step 1, 2, and 3, and then the peak formation down low is being made. All right, same thing, 1, 2, and 3. This is on a lower time frame. I think this was actually this different chart altogether. Same pattern though, stair step 1, 2, and 3, and then ending in that 1, 2, 3, and the engulfment down here. All right, so that's the price action that we're looking for. Overall, this is what we're looking for: 3-day cycles, the signals, and things like that. And then overall, my playbook comes in. I've got the note card style of looking for these opportunities. What does the chart look like on the day over the course of 3 days? Makes it really simple. And I've posted this multiple times now on these, pretty much every live stream that I've been doing. So I'll scroll down through this. You all can grab this, or at least see it for yourself, so that way you can go make your own, which what I highly would suggest. I would actually just suggest seeing all of these and then going and making your own. All right, good stuff. I know that we're still having some buffering issues, and I said that I fixed it, and I did fix it, and then today it still doesn't work, so I do apologize for that. I had tested this yesterday, and it worked just fine. There was no latency or buffering issues, and I was really happy about it. And then, well, sure enough. So apologize for that. We're going to get it fixed, I guess, for the next one. But we're going to go into the actual analysis part now. We'll do the 3-day setups, Wednesday, Thursday, and Friday, looking for the different types of templates that we could be looking at coming into today. For Friday, which in my opinion is my favorite day of the week to trade, because I already have the entire week on the board. I can see all of the moves that have been made throughout the week, and then now I can make better decisions coming into Friday to see if a better setup or template has presented. So let's go back. We could take a look at Monday, Tuesday, Wednesday. Monday was a fairly wide range day, opening range, pretty wide. Then we get a breakout on Tuesday, opening range breakout, and then Thursday, an attempt to go higher that failed. So we had 3 days of breakouts, 1, 2, 3, and then a peak formation high now at the high of the current week. So we had a large pumping day over here on, was this Wednesday? And I've clicked the wrong thing. We had a large pumping day on Wednesday. Then on Thursday, they attempted to go higher. They broke out and failed. This is going to be my first red day. So they All right, and then this is also made now a lower low, higher high, lower low, which I think we may have actually poked into today as well. Okay, so we made this lower low break-in structure down. Again, I always use the same exact way of measuring my structure. So this higher high here would confirm this as a swing low. They broke down, made a lower low. Then they also triggered previous day's low today. So now what could I be looking for as for, today? So either it's going to be one of two things. Well, I guess it'd be one of three things. Either one, I do absolutely nothing. I don't look to take a trade. Number two, we could be looking at a first red day trap in a strongly trending market or a breakout market that's going strongly to the upside. So this was similar to this. You got breakout, breakout, and breakout. We got a first red day over here. And then on this day over here, they kind of went down and then went vertical back up towards the high, closing in breakout for the day. Same thing with this example. Strongly trending market breaking out to the highs. They close a first red day and then go vertical to the upside the next day. So it could be a first red day trap. And for these, my main focus is always for these trap trades looking at the closing price from the previous day. That is where I know, or I can make decisions on whether or not that setup is going to play out appropriately. Or we could be looking at a normal first red day. So we get a first red day. They break down. They make a lower low. In this example, they actually broke out a previous day's low and pumped it back up, and then went vertical back down, which is good. Same thing here. First red day, they break down underneath closing price or underneath the previous day's low. Pumped it back up, and then broke down over here as well. Oh, excuse me, I'm looking at the wrong thing. First red day over here. And then they actually just continued to make lower lows. This day over here was fine as well for the continuation. But let's see. First red day. This is first green day trap. All right, good stuff. Let's go back. So now we understand what sort of opportunities we could be looking for. Ideally or realistically, I'm going to be watching the high and the low of the day for the trade. So high of the day would be for the trade, and then the closing price from yesterday would be to be aware of the trap. So here's the close from yesterday. If I can get that up there, I like it, do it in a different color so I can, there we go. Okay, there we go. And then we've got the high of the day here. So I would be watching the high of the day for some kind of three peaks pattern. So maybe like Asia session 1, London session 2, New York session 3. We're making higher highs and higher lows on the day. They made this higher high, and then they did actually make a lower low. So this could be, peak 3, and then we break down. That would be fine. I'd be happy with that. Looking at this, I have a very, very clear idea of what to look for. We've made a lower low. I've got peak 1, peak 2. It's Friday. Look for peak 3 and look for the breakdown. That's a very clear thing to look for. I like this pair. It seems like it's trading very cleanly. And then also for the trap trade, I know exactly what to look for on the day. I've only got 2 levels that would make me interested. This high of day level and closing price. And that's it. If we don't come off of one of those levels, then I don't do anything. And this will probably just end up going vertical towards previous day's high or something like that, in which I will not take place or take part in the trades or anything like that. So this is good. Let's go to US 30. Okay, US 30. Similar to the NASDAQ, we have multiple pumping days. Let's take a look at weeks of breakouts. We've got week 1 breakouts up last week. We had a day 1 of the 3-day cycle on Tuesday. Day 2 of the cycle was on Wednesday, continued to go vertical. And then day 3 broke back down and was day 1 breakouts down, turning into day 1. It would actually probably be more of day 1, day 2, and then today is day 3 because of we're at the high of the current week over here. Did we trigger previous week? It's pretty close. All right, so they broke out. They attempted to force a high and then failed. And then actually broke out back down to the other side. So day 1, day 2. And then today could be day 3. We won't even worry too much about that. Excuse me. We're just going to look and see, hey, this is day 1 breakouts down and possibly a first red day. So maybe, where did the pump begin from? Maybe it began from back over here. I'm just throwing in some detail to see, what could I be looking at. Now, this is breakouts day 1. So after breakouts day 1, the whole idea is, hey, the market only does 3 things: breakout, trend, reverse, or stay in a trading range. So this is either going to break out and succeed, or it's going to break out and fail. We've got a nice rectangle building. We've triggered previous day's low. I would be happy to watch this going into the New York session. And again, my 2 main levels to be focused on are the low of the day and the high of the day, and also just the pattern on the day itself. If we keep breaking down, making lower lows, lower highs, I probably don't want to go long on that. And we've got space to get back down to where that pump could have began down over here. Now, I do like NASDAQ more, so I'll probably be more focused on that, but this is a good coil for an explosion, either today or maybe Monday. We'll see. Okay, the Russell. The Russell looks a little bit different than the other 2 indexes. We got a day 1 of the cycle on Monday. They came down a little bit lower on Tuesday in breakout. Day 1, day 2. So this is kind of like a first green day. And then the trap breakout to the downside. They pumped it back up in 3 peaks and rolled over. And on Wednesday for the first green day trap. Again, going back to the playbook and looking. It actually played out almost perfectly, I would say. Yeah, we can go find the traps for these. There's the first green day. We get a breakout day. Then you get a first green day and then a rollover on the next day. Same thing here. You get the first green day and a day that closes at its lows the next day, looking for the pump up, lower lows, lower highs. So I'd say that was pretty good. So we get the first green, the pump up, and where do we go? Yep, first green, the lower low, and the pump up, and then the rollover on that day and on yesterday as well. And yesterday was actually not an inside day, but for whatever reason, the indicator is showing that it is. Kind of weird. Take this, toss this across over here. Oh, gosh. There we go. Grab this. Okay, so all I've done now is just analyze. This is shorts triggered in the market day 1, breakouts day 2. Shorts triggered into the market again, but not really that great. So shorts triggered in for sure day 3. So we've got at least 3 days of breakout traders in the market now.